This is a document you would use to be able to verify that all documents are compliant and that you have all the documents necessary to be able to be audited and still be compliant with any state and federal laws. All the way on the top, you're going to go ahead and enter the loan originator's name, their phone number, if it was lender paid compensation or borrower paid compensation, the total fees, borrower's name, the loan to value, the combined loan to value, and the rate. You'd also enter the property address of the property that the borrower purchased, the lender's name, the funding date or the date in which the loan closed and was funded, the borrower's middle credit score, and the loan amount. On the right, you'd enter if it was a purchase, a refi cash out, if it was a second mortgage or an equity or a home equity line of credit or home equity loan. And then whichever one of the specific loan programs it was, if it was a Fannie Mae, FHA, VA loan. If it was a full doc or a stated income, stated asset loan, or just a stated income loan, which they do exist. If it was a first mortgage, second mortgage, or a HELOC, home equity line of credit. If it was owner-occupied, non-owner-occupied, or a second home. If it was a fixed mortgage, an ARM, or an interest-only loan. If it was for 30 years, 15 years. If it was 1 year, 2 year, 3 year, 5 year, 7 year, or 10-year ARM. Going a little bit further down, you're going to want to make sure that you have the necessary information and documentation as well. It says here you need to have a copy of the broker check or a copy of the wire transfer that was sent. And it says here who verified this information, if it was the loan officer or the processor. And then if you have a compliance officer that double checks the information that the loan officer and the processor entered and verified, also double checks. That way you have a second way of verifying that all the information was provided correctly. In this case, as the loan processor, you put here P for a loan processor. If you go a little bit further down, it'll tell you exactly all the documents you need to be able to provide. So let's go over each and every one really quick. You're going to provide the final CD or the final closing disclosure with the borrower's signature, the combined closing statement signed by both the borrower and the seller. So these are the closing documents already. The note signed and dated, the mortgage signed and dated, the rate lock confirmation. Now this is very important. That way you have confirmed that all the information from the rate lock is compliant with what the borrower is actually signing and getting at closing. The original disclosure divider sheet. The 1003 must be signed by the borrower and the mortgage loan originator. The LE or the loan estimate. The written service provider list. The fee worksheet. The Florida fee disclosure if you're in Florida. If not, then it would be your state-specific form. Anti-steering must be signed by the mortgage loan originator as well. The letter of intent must be signed by the mortgage loan originator, as well as the mortgage loan origination agreement. The servicing disclosure statement. This is another Florida lender disclosure, another specific form for Florida. In other states, you'll have other specific forms that need to be completed as well or signed. The Equal Credit Opportunity Disclosure Act. Very important so that there is no discrimination. The borrower certification and signature authorization. This is important when you need to be able to provide the lender a verification of employment, and you need the borrower to complete this information so that you can provide this to whoever you need to complete the verification of employment, since sometimes there's third-party companies that do this for the borrower's employer. Disclosure notices. Now, if it says here, do not sign FHA if not applicable. Always remember that. Credit score disclosure. Now, this is where you're going to be able to disclose to the borrower exactly what their credit scores were. Never by hand. Always the scores should autofill. The Patriot Act disclosure, which should include a copy of the driver's license, and it should be an unexpired copy and legible, obviously. A 4506T signed and dated so that the lender can verify any past year's tax returns for the borrowers. Counseling list and acknowledgement form. Affiliated business disclosure. This is if sometimes you have an arrangement with another company where you're going to get paid for referring the borrower over to the surveyor or the appraiser, and then you're going to get paid for that. Sometimes lenders have this, and if you have another company that you own, for example, if you own the real estate company that's also doing the loan, or or you own a credit repair business that the borrower might have used to be able to get qualified for the loan, then you need to be able to have that form completed and disclose the proper information. Privacy notice, Social Security number authorization, and this is usually when the lender finds a discrepancy in terms of the name or the number on the Social Security information that you've entered on the application. Any FHA disclosures or VA disclosures, these are going to be obviously specific for FHA loans. An FHA addendum, a mandatory clause, and FHA addendum to contract. This is another document that sometimes might be specific to each lender, but in general, this document needs to be completed for each FHA loan. Consumer choice disclosure, assumption notice, notice to home buyers, HUD appraised value disclosure, identity of interest, FHA Social Security number certification, FHA home inspection form, alternative document, if there's any alternative documents. For example, if you need to provide 12-month bank statements, then those will be alternative documents. Sometimes if you need to provide electrical bills or telephone bills, these are alternative documents that you need to be able to provide. Counselor certification, miscellaneous FHA VA disclosures, additional loan information divider sheet in case you need to add all these other documents and you don't want to include them with all the other documents that were in the beginning. These would include income and asset documents like bank statements and retirement account statements, as well as pay stubs, W-2s, and tax returns. Credit report, you need to be able to have the credit report, all pages included, the purchase contract with any addendums that were on the contract. The appraisal with the invoice must be included. The credit report also needs to include the invoice. The survey with the paid invoice as well. Pest with paid invoice if you had a pest report. The insurance and flood insurance with an invoice and paid receipt. All title documents, including the chain of title, the wire instructions, and the title commitment. The approval letter with all the conditions. Now, all the way on the bottom, you're going to sign as the processor, and if there is a compliance officer, they're going to sign as well. Now, remember, not all of these documents are going to be required for each and every package, but many will be required. So make sure that you verify which ones are specific to your state. Also, make sure that all these documents are saved in digital format so that you have them quickly available in case you're audited. You're able to send the specific document that the auditor needs, and you don't have to send it via fax or via email or scanning it, and then sometimes it doesn't appear as legible as it should, and then that becomes an issue because then you have to keep resending it, and sometimes auditors start asking for more documents because of that. So it's better to keep it simple and have all the documents ready and available in digital format as well.